Hello, everyone. Welcome back to our channel. If you're new here, don't forget to hit the subscribe button, like this video, and click the bell icon for notification of our future content. So let's jump into today's topic. Have you ever heard of a ship in distress sending out SOS? A bailout in the financial world is a kind of like that. It's a rescue boat responding to an emergency situation. But instead of a sinking ship, it's a struggling business or an entire economy that needs saving. So let's break it down and make it simple for you. Well, a bailout is essentially a financial lifeline given to businesses or countries that are facing serious financial difficulty or even bankruptcy. Now, imagine a large company that has gone into trouble. Maybe they made poor decisions or have been hit by economic downturn. Without help, they could go bankrupt, and that could mean job losses, investor losses, and ripple effect on the economy. That's what when a bailout comes into play. This help can come in various forms such as loans, bonds, stocks, or cash. And it's often funded by taxpayers, by the government, or by internal organizations like International Monetary Fund. So what is the aim of a bailout? Well, a bailout is to prevent the collapse of the struggling entity, a bank, an institution, or maybe a big conglomerate, and stabilize the broader economy. For example, let's suppose we have Air India, the biggest airlines in the country. And because of losses, the Air India is not able to operate its business. So what the government does is they give certain packages, they give bailout, they try to subsidize the airline so that they can restart their operations. So this is the basic definition and understanding of a bailout. It's a help that is given by the government to a falling entity so that they could recover and stand on their own feet. But it's not just a free handout. The entity receiving a bailout must usually agree to certain conditions or reforms. Many a times the bailouts are controversial. Now, because it is public money and you're giving to an entity so that they could recover, they are already in loss, people argue that they can encourage reckless behavior. Why should public money be used to fund institutions and companies and enterprises which are not doing good, which have failed to generate profit? These companies might take bigger risk if they believe that they'll be safe from any fallout. There's also a question of fairness as taxpayers effectively end up footing the bill. On the other hand, supporters argue that a bailout can necessarily stabilize the economy and save jobs. Just imagine the airlines being completely shut down because they did not get sufficient amount of bailout at the right time. So as with many economic issues, there is a balance to strike. We as a government, as a country, need to decide and have clear policies on which all institutions can get a bailout. And there you have it, the concept of bailout in a very simplified manner. Remember, understanding these terms can help you make sense of economic news and take charge of your own financial journey. If you found this video helpful, don't forget to hit that like button and share it with your friends. Thanks for watching. Stay tuned and stay financially fluent. See you in the next video.